Is this the end of Tesla's dominance in key global markets? In May, the numbers were brutal. Sales crashed 45% in the UK, 67% in France, and an astonishing 68% in Portugal. In China, Tesla marked its 8th straight month of decline. Meanwhile, BYD, its biggest Chinese rival, just outsold Tesla in Europe for the first time. Despite facing higher tariffs, something's changed. The once untouchable EV giant is now under pressure from all sides: politics, competition, and shifting public sentiment. A rebound in Norway and Australia shows signs of life, but is it too little, too late? Quickly hit the like and subscribe button for updates, and let's get into it. May was brutal for Tesla in Europe. No other way to put it. Sales took a nosedive across key markets, with the company bleeding market share in what used to be some of its strongest territories. In the UK, Tesla sales dropped a staggering 45% compared to the same month last year. That's not a dip. That's a free fall. But it didn't stop there. Key markets like France and Portugal saw declines. Even the always loyal Nordic markets pulled back. Sweden clocked in a painful 53.7% decline, with just 503 new Teslas registered in the entire month. Denmark slid 30.5%, the Netherlands 36%, Spain a little less severe but still down nearly 20%. And this marks the 5th straight month of year-over-year drops in places like Britain, Germany, and Italy. The consistency of this slump suggests something deeper than a seasonal hiccup or supply chain issue. This is a pattern that's flashing warning lights for Tesla's European strategy. But what's the reason behind it? Tesla's May meltdown in Europe isn't just about cars. It's about politics, perception, and a CEO who doesn't know when to hit the brakes. While sales tanked across the continent, Elon Musk was busy on the political stage, cozying up to Trump's White House and calling Europe over-regulated from a far-right event in Italy. That timing? It couldn't have been worse. European buyers aren't just choosing cars, they're choosing brands they trust. And when Tesla's CEO is praising nationalist parties and calling out European leaders as tyrants or fools, it starts to get personal, especially in Germany, where Musk backed the far-right AfD, or in the UK, where he slammed Prime Minister Keir Starmer and even called for Parliament to be dissolved. That's not exactly how you win hearts or buyers. Add in Trump's new tariffs, 20% on EU imports, and Musk's role as a trade advisor pushing for zero tariffs while representing a government hiking them, and you've got a credibility mess. Tariffs hurt Tesla's pricing in Europe, and Musk's political posturing made it worse. Bottom line, European consumers aren't just cold on the product, they're chilled by the politics wrapped around it. And it's not just in Europe, the same is happening in China. Tesla's China-made EV sales just clocked their 8th straight month of year-over-year decline, and it's not looking any better in May. The company sold 61,662 vehicles last month, including both domestic sales and exports from its Shanghai factory. That's a 15% drop from the same time last year, and when you zoom out, the first 5 months of 2025 show a 17.6% year-on-year decline. This slump isn't just a blip, it's a trend, and one Tesla can't afford in a market that's heating up fast. Xiaomi is already putting pressure on the Model 3 with its SU7 sedan, and now its YU7 SUV is gunning for the Model Y's crown. The SU7 alone delivered over 28,000 units in May, while Tesla's overall China numbers continue to erode. Meanwhile, rivals like Li Auto, BYD, and XPeng are all posting year-over-year growth. XPeng deliveries jumped an insane 230% compared to last May. Even NIO, often considered a Tesla light, managed a 13% year-over-year bump. The writing's on the wall. Tesla's once dominant grip on the Chinese EV market is slipping. And with no clear turnaround yet, Elon's Shanghai output machine might need more than a tune-up. It might need a full strategy reboot. While Tesla stumbles, BYD is charging ahead. And May marked a historic shift. For the first time ever, BYD outsold Tesla in battery electric vehicles across Europe, despite being slapped with heavier tariffs. That's right, even with a 17% EU duty compared to Tesla's 7.8%, BYD's European sales skyrocketed 359% year-over-year in April. Tesla? Down 49% over the same stretch. This isn't just a good month for BYD, it's a watershed moment, according to Jado Dynamics. BYD didn't just beat Tesla, It outsold legacy European brands like Fiat and Seat in major markets like France. And it's doing it all before its new Hungarian factory even comes online. Once production localizes, BYD will likely cut costs and accelerate even further. This surge comes at a time when Europe is becoming ground zero for the EV battle. Demand for electric and plug-in hybrids in the region is climbing fast, up 28% and 31% respectively, while combustion engine sales continue to fade. Tesla's losing grip on Europe isn't just about Elon's politics or delivery slumps, it's about real competition finally arriving. BYD isn't knocking, it's kicking the door down and Europe's consumers are answering. But Tesla has another story to tell from Norway and Australia that could flip the whole game. After months of bleeding market share, Tesla finally has some good news. The refreshed Model Y is starting to show signs of life in key markets, with a serious rebound in Norway and Australia. In Norway, Tesla sales surged 213% year-over-year in May, selling 2,346 Model Ys versus just 690 last year. Australia saw its highest Tesla sales in nearly a year, driven almost entirely by the Model Y, which accounted for 3,580 out of 3,897 vehicles sold. That's a 122.5% jump for the crossover. But don't call it a comeback yet. These bright spots are the exception, not the trend. Tesla's broader global picture remains shaky. European sales are tanking across the board, with massive drops in France, Sweden, Portugal, Denmark, and more. The Model 3, once a global juggernaut, is losing traction badly. Yes, the updated Model Y is helping, especially in countries where Tesla is actively delivering new inventory. And yes, there's hope the Berlin factory will reignite European momentum. But one refreshed model can't fix systemic issues. If Tesla wants to turn these wins into a real recovery, it needs more than a rebound. It needs a reinvention. But Tesla's moment of dominance is over. That's not to say the company is doomed, but the path ahead is rough, and the margin for error is gone. The brand is facing mounting competition on every front. BYD is taking Europe by storm, Chinese EV makers are flooding global markets, and legacy automakers like VW, Hyundai, and BMW have finally caught up in tech, pricing, and variety. The updated Model Y is a short-term win, but it won't carry the brand forever. Tesla needs fresh products, and fast. Rumors of a slimmed-down Model Y could be a game-changer in cost-sensitive markets, but it needs to ship soon and hit the right price point. The long-delayed Cybertruck is still niche, and the Model 3's shine has faded. Then there's Musk's exit from the White House. He might now be setting new goals with full attention to his company. Tesla will need to localize production, cut costs, and drop a compelling new EV by year's end, but it can still rally. Innovation isn't optional, it's Tesla's only way forward. In the end, let's take a quick overview of the details from today's video. Tesla's May sales plummeted across Europe and continued falling in China. BYD surged past Tesla in Europe, even while paying nearly double the tariff. Small rebounds in Australia and Norway came from the refreshed Model Y, but elsewhere, the picture remains bleak. Brand image, political missteps, and rising competition are testing Tesla like never before. What do you think? Is Tesla still the frontrunner, or has it already lost the EV race? What should Tesla do next to turn this around? Comment below, and if you enjoyed this video, give us a like, and don't forget to subscribe for more updates.